All right, it's Pulse of the Day right now, and joining us to speak on how some corporate announcements and Q3 earnings are expected to drive market sentiments on the NGX is CEO Asheer Investment Limited, Muktar Mohammed. It's a pleasure to have you in, sir.
Thank you for having me, Jana.
All right. Let's begin with FBN Holdings, right? After several cancellations, they have announced a date for their rights issue. They've also revised their proposal, doubling their capital raise, to about from, I think it was 150 billion to now 350 billion. They're offering less ordinary shares, about 3 billion less. And obviously, as well, for a premium of 25 naira, that's about 10% more than what they were offering before, the initial price. So what do you make of this latest revision? Is this still, is it a sell for you?
Well, if you look at FBN Holdings, ordinarily they should be the tools of investors, but we've had a lot of issues. But I think with what they are doing, the appointment of a new MD, which is good because of the pedigree that is coming in with their Q2 results also was fantastic. With the reduction in terms of ordinary share, that means the dilution will be low. So, but again, you remember before then, the other time the price was low compared to the price that they are doing. It was supposed to be 15 naira, but now they are doing at 25 naira. So definitely that 10 naira increment and also reduce the number of ordinary shares, though the amount has gone up. So I think it's strategic, but do you really see that being a key driver? If you look at their result, if you look at their dividend payout, which normally is what drives equity in Nigeria, you are not too impressed. But if you look at the future, I mean, if you are investors and then you're not looking at the future of the bank, what you think will happen, you mustn't forget that this bank is still a bank that is doing very well corporately in terms of results, but maybe in terms of management strategy, value for shareholders have been very poor. So hopefully we are going back to that era where every investor look forward to having an FBN holding share.
So they're investing in potential, not necessarily, past antecedents.
No. I think when you're investing in FBN holding, you should know that you're investing in potential at the moment, because when you look at its peers, what their earning per share is, the kind of profit they have made, and even if you look at in terms of strategy, trying to look at a spread, you can know that FBN holding is still just spread within Nigeria. Even within that Nigeria, a bank like Access Bank has overtaken it in terms of numbers of branches, like what FBN used to pride themselves. Most of all these their peers have already expanded. Most of them have been expanding globally. They have entered so many countries in Africa. I think the key drive for FBN holding will be their holding structure. What is the plan for the holding structure? Where and where would they be investing? I think for the banking space, there's a lot of competition there. I don't think normally the banking space used to be what drive FBN holding capital. Profitability, but I think they may have to look towards the holding company to drive profitability going forward.
All right, let's shift gears a little bit. Dangote Sugar, they've emerged second on the top gainers chart last week, and they're surging nothing less than 13%. We know it's in a domicile sector that is extremely, very, very volatile, consumer goods. What are your chances of it living up to its buzz upon earning release and perhaps even climbing to the 12-month high of almost 90 naira, and it's currently at 35 naira?
Well, if you look at Dangote Sugar, you want to say what has driven it to the where it was that high. You remember it was the coming together of Dangote Sugar and National Salt. That was what was driving the stock to that, and that what they call that merger is not happening yet because of they could not meet some criteria of the exchange. So if you see those movements as it's storing now, is based on a investment sentiment looking forward to that merger, and a lot of investors knows that by the time you buy Dangote Sugar, you buy National Salt, you are going to be having Dangote Industry, which will come up with other Dangote companies that are not listed. And when you look at that one again, it's still about potentiality, by and by the profitability of that sector. If you look at that sector in terms of result, in terms of profitability, you remember the last quarter result, the half-year result was not that very fantastic, but investors are looking at going forward in the long term. If this synergy comes in, if this merger comes in, then if you are buying at 35 naira, you are definitely buying at a discount, because again, what you see might be what has happened in Boa, because that's what investors are saying. You remember Boa Food, Boa Cement. Before now, it was only Boa Cement. Then Boa Cement now came up with Boa Food, and you saw the movement that happened in that stuff. So investors are speaking in anticipation of that measure that would drive that stock.
So, are you suggesting that gearing into 2025, when we had the Dangote refineries is going to be listing in the first quarter of 2025, or perhaps the second quarter, is that going to have a ripple effect on the performance of Dangote Sugars? No, you follow well that.
No. I don't think so. It's going to be between the Dangote industry, where we have the Dangote, Pesta, National Salt, all coming together. The refinery will be external. The only ripple effect you see in the refinery, you could see ripple effect in the oil and gas sector, not necessarily on the Dangote group.
All right, I mean, we'll wait to see what happens, as regards that. Again, it looks like we're buying into potential there. Another stock that's getting charged up ahead of a Q3 earning release is the Transcorp Hotel. We know its sister, TransPower, just released impressive earnings, and Transcorp Hotel, I believe, is believed to release theirs by the end of this week. They've gone from 90 naira to 97 within a week. And considering how it's within the service sector and what's happening there, the impact of macros, do you see earnings living up to the expectations that are, on the NGX right now?
Okay, but I mean, for your information, that report is out. Transcorp Hotel, that result is out. The 3Q ending is out. In terms of numbers, it's impressive. But when you as an investor, you don't necessarily look at the numbers in terms of profit after tax, profit before tax. They're very impressive. But if you look at that stock at the price that he's selling, and an earning per share of just 1 naira, that will give you a dividend yield of about just 1.something%. And then the price is almost, like you said, about 97 naira. So even at today trading, I think you see there's a lot of investors were not keen that, because the price itself is not commensurate with the result. But in terms of performance, in terms of result, where they are coming from, good result. But when you look at it by and by, the price it is selling for now, with the kind of market we have, when you are investors, you want to look at competitive buying it, or what we call, you try to do competitive analysis, comparing one stock to the other. Why should I buy a stock that have an earning per share of 1 naira and it's selling for about 100 naira? Why should I buy it? Or should I go and buy a stock like UBA, which is also selling for 26 naira and have an earning per share of over 15 naira? So you need to that, you look at that, then it's not so much impressive. And like you have said, that sector is still have one or two challenges going forward. It's very competitive. We have others, Airbnb now coming up to that space. A lot of investors are not really staying in hotel that much. And so definitely, I think when you look at that with what they are doing, I don't think it's a company that I want to put my hands on with the price that it's selling for at the moment.
Wow, interesting. So from your tone, you don't think it's going to get to that, trillion, stocks worth over $1 trillion anytime soon?
Look, when it comes about trillion, sometimes we've seen them get to that trillion. About how long do you stay in that trillion space is very important. We've seen them come to that trillion, but again, that's based on perception and who is buying this common Transcorp Hotel. Who are those that are buying it? Are they institutional investors? Are they retail investors? Are they high net investors? For Transcorp Hilton, the only thing that will push it to that level is you are looking at highly liquid investors, that's high net investors and institutional investors. But when you're talking about a retail investor, any retail investor with the right strategy won't be looking at Transcorp Hilton. But the good news for them is that we have a lot of high net investors and foreign investors that will be looking at Transcorp Hotel because of the management team that is running that company. That could be what would be the trigger. But when you look at the results, by and by, the earning per share and the result, then it's not very impressive, because what it means is that you can only pay 1 naira as dividend. They cannot pay it off. Last time they paid just 35 kobo. You don't expect them to pay all their earning per share in dividend to them. So the best you can get maybe is 50 kobo, and for a share that is selling at that high, It's for retail investors, it's too expensive.
All right. On a final note, what's your take about Aradel Holdings? There's been so many buzz. Look at what happened last week, Monday. The morale was so much, and right now we're seeing that the market is literally experiencing some cascading effect. Is it that investors are going to be catching a falling knife, or perhaps, who knows, it just might have found its bottom?
Well, like one of my friends put it up, he said Aradel have refused to go to the state of law of gravity, which is mean that it has gone up, it should be coming down. But he didn't do that today. I think he's still being there up there. And again, that is also tied in terms of having 100,000 unit to move the price to the a new height. So I think that stock, I keep saying, if you're an investor, you are looking at Aradel. If you look at their market strategy, if you look at their introduction, if you look at what they want to do, if you look at the management team, you look at what they are into, by and by their contemporaries like Seplat, maybe Oando, you think it's very, very cheap in the near future. But in the near term, when you look at that price, what they are trying to offer, you might look at it as it's not a good entry point at 700. So that's why a lot of investors are waiting to see if the price will come down, and then they will begin to take opportunity and take position in it. Okay. But for now, I think I can still say long-term future, that is a good stock. But if you are thinking that it will climb to that 1,800 or 3,000 or 2,000 in the short term, then you must be in a dreamland, because again, like you said, the market is beginning to give it its real value.
All right.
And over time, that real value will come and investors will key in.
Yeah, I mean, we'll see what happens as regards that stock. Today it was muted on the NGX. We'll see what happens for the rest of the week and ahead. But thank you so much for joining us, Mr. Muktar Mohammed, CEO of Asheer Investment Limited.
Thank you.
Thank you for having me. My pleasure.